Welcome to CryptoTwits. I am super excited to talk with our guest today, Carlos Domingo. You started Securitize. This is your baby. This is
my baby. Yeah, I had two co-founders, but I'm one of the founders. Yes. And
when I've been doing these kinds of interviews with people who have grown their own thing in the space, I don't know if you ever watched Inside the Actors Studio, but the thing that they always start he's passed away now, but Lipton would always start off asking the actors or whoever he had on stage about themselves, because it's always fascinating, because people just don't they were born, they went to school, and here they are, the CEO. There's a lot more stuff that goes in there. And when I was researching you, I was like, this is a pretty wild story. And so let me know if I've got this right. I think I sent these to you, but you have PhD in computer science, and then you ran R&D for Telefonica. That's one of the biggest in the world, isn't it?
Yeah, it's one of the largest telecommunications companies in the world. At least it was. Now telecommunications is shrinking, and Telefonica has shrunk a lot. But
oh, that's right.
Back then was a very large company. It's still a large company, but it used to be much bigger. Yeah.
And so, what brought you there? How'd you end up there?
It's very simple. So I'm originally from Barcelona, from Spain, and then I always liked computers since I was a kid. I had computers at home, and a Spectrum and ZX81. Most people don't know those computers. These are pre-PC, and then I got a PC very early on, and I was into computers, so I went to study computer science, which was not an engineering before, it was a science, and then it became computer engineering over time. And then I got a scholarship to go to Japan after I graduated from undergrad and do my master, and they ended up doing PhD, postdoc, etc. And started my career in Japan. Very unusual journey from Spain to Japan back in those days when people didn't travel as much as today. And then while I was in Japan, basically a headhunter reached out to me to move back to Spain. I just felt like, something. I haven't worked in Spain since I left, and had my parents that were all already getting older, and being back in Spain was good, and working for Telefonica obviously was very prestigious, and it was kind of starting a new project within the company when telcos were looking at, getting into digital services, which was my strength. I come from a software background, not from a telecommunications background, but over time I ended up, taking over the entire R&D for the company. So it was quite a journey.
I wrote here in my notes that what I think people miss about Securitize, and maybe I'm way off here, but in the Securitize, they it's a crypto company. But is it more of is it a crypto company, or is it you developed something that you saw as a problem, and then crypto was just kind of the space that made sense for it?
The first question is, what does crypto mean, right?
Good question.
So over the years, people have asked, are you a blockchain company or a crypto company? It's well, it depends what you mean by crypto, right? And I think my definition of crypto is this kind of new financial services or new economy, if you want, that sits on top of public blockchains, right? So if you think of crypto being that, what we do is we bring TradFi assets into the crypto ecosystem. And leverage the crypto infrastructure, technology, et cetera, to improve those assets. So from that point of view, we're definitely a crypto company. From the point of view of the TradFi people, we're more like a blockchain company that, we'll help them improve the rails where their assets sit with this new technology called blockchain. But we are believers on public blockchains and public ecosystems. I think if you look at the history of innovation, closed ecosystems or semi-closed ecosystems have never prevail because they don't lend itself to open innovation, and open innovation is where interesting things happen. So I'm a big proponent of that, and so far has actually happened. So from that point of view, yes, we use blockchain, but we use crypto blockchains and crypto rails to put financial assets, right?
I guess just very simply, what's the easiest way to describe Securitize?
Well, Securitize is a tokenization company, and this is a word that many years ago I had to explain what it means. I think today most people kind of understand what it means, but what it basically means, it means that we take real world assets, so funds, bonds, stocks, credit funds, etc., and we tokenize them, which means we represent them on crypto rails or on blockchain, with the token being kind of like the way that you represent the ownership to basically improve how they're being managed. So in capital markets, everything sits on ledgers, right? Everything you own, Apple shares, somewhere, there is a record that you actually own those shares. So you can trade them, you can get a dividend paid, etc. Those records and those ledgers are extremely inefficient. They're siloed, they're not connected to each other. And this is what creates all these layers of intermediaries and inefficiencies in capital markets. So we basically tokenize those assets to put them on a single public distributed ledger that is cryptographically secure. That's what crypto and blockchain is, to basically improve how those assets behave and to modernize the asset itself. By assets, as I mentioned, mean financial services products.
KKR in 2022, BUIDL, is it, how do people pronounce it? BUIDL or BUIDL? BUIDL, okay, BUIDL. There we go.
This is for the crypto people, this is like a joke, right? Like there's this very famous guy that I can't remember his name, but he instead of he was one of the times that Bitcoin crashed. He said instead of hold, he said hodl. Like I never sell hodl because crypto was collapsing. Like one of the many times it has happened over the years, and then people started like playing the same word of switching the L by the D, but on the build, like you BUIDL, like means you continue building things in crypto irrespective of what the price of the assets are. And kudos to BlackRock, by the way, because they come up with the idea of the name, because BUIDL actually means BlackRock institutional, BlackRock USD institutional liquidity, digital liquidity fund. So it's an acronym that actually has a name.
I bet somebody at BlackRock wanted to do this because of the exact ways you said, who was like crypto folks, was like, we're going to have to create the acronym.
It was definitely Robbie, Max, or Alicia, one of the digital asset teams that come up with that.
That's awesome.
And it's a pretty cool name, by the way. So
yeah, what I've really liked about the space is like when Van Eck has come out with their tickers, there's a lot of the kind of like the crypto nomenclature, like little degen in the labeling and naming of things, which is just kind of who we are.
It's like our ticker for, we will talk about this later, I'm assuming, but when we go public soon, our ticket is going to be SEC, like Securitize, Z from Securitize. But if you read it quickly, it's sexy.
Oh, that is great. That is really good. That's awesome. Oh, that's awesome.
So
Keith,
nobody will forget our ticket is sexy.
That's really good. Well, you guys have like Apollo, Hamilton Lane, Van Eck. I mean, how big are you guys like in the space relative to like everybody else? I guess like how big is the space?
So the space is not very big, to be honest with you. This is very, very early days in the space.
Yeah.
It's 20, 25 billion. I don't know, depending which metrics you look at, what do you count or not as really tokenization versus just some people putting things on a blockchain that don't do much, etc. But we are like the largest platform. I think that's universally recognized, and of people operating on public blockchains. Again, there's a lot of private stuff that we don't really count it, and we probably have somewhere between 20 to 25% market share, either overall or in some product categories, etc. So this is a space, by the way, is not going to be like somebody owning 90% of the space. It's too many asset classes, too many geographies. So actually having a double-digit market share in this space, I see it as an extremely good and healthy market share to have. So.
I guess like two kind of different questions, but both about the space. Like, how big do you think it's going to get? And also, like between like before the ICO collapse in 2017 to the Biden administration's Gensler going after. Although I do have to, every time that people mention this, the Trump's for SEC guy, the last thing that he did before he left office was go after Ripple. Like it wasn't Gensler who actually started it. It was
that's true.
So, but
it was Jay Clayton.
Jay Clayton did that like as a huge middle finger. Or I don't know, but what was there like a moment in between those years where you're like, this is too early or this is going to take longer than I thought?
I think that this 2018 collapse after the 2017 first kind of like major bull run of crypto was fine because we were really starting, right? And when you're starting, you have all the energy, you think, well, things will happen, you don't have much. We were a very small company with 10, 20 employees. We just raised our Series A in 2018. So So it was fun. I think that of all these years in between, the worst year was probably 2021. And the 2021, and I'll tell you why. In 2021, that was like the peak of the crypto bubble before it collapsed. And for a company like us doing tokenization, which involves regulated entities, we are SEC registered transfer agent, broker dealer, etc. That was not getting a lot of attention. Like now, everybody talks about tokenization. Nobody talked about tokenization in 2021.
Right.
And then you had companies like, BlockFi, FTX, Celsius, that they were like growing like hell. Everybody wanted to invest there. I remember one of my investors that had invested in me at that time. I was trying to raise our Series B. And he said, no, why would I invest in you? Look at BlockFi, how much it's growing. I'm not going to say the name, but he invested in BlockFi, and guess what? Now it's worth zero because BlockFi went out of business. But it was very difficult to compete with those companies that were getting all the attention. They were all the growth, because obviously many of them were doing fraud and behavior, etc. And crypto was exploding because of the post-pandemic low interest rate environment and people with the stimmy checks putting money in crypto, etc. And the NFTs and DeFi, there was so much activity, and tokenization, nobody cared about it, and it was hard to raise money for us. And we've been needed to raise money every 18 months since we existed, because we were building and running out of money until hopefully now is the last time we raise money once we go public. And that was hard, because at that point you thought like, this is impossible to compete. I cannot compete with regulated products against unregulated platforms that do whatever they want, that they, sell all type of products without caring about KYC or about following regulations, which obviously add friction to the process. Yep. It's just impossible to compete. And then ultimately we raised our Series B from Morgan Stanley, which was great. And Morgan Stanley, kudos.
What did that feel like?
It felt good, and I'll tell you why. Like, these guys also should feel very vindicated. So the GP of the fund, Pedro Teixeira, who has been in the board since 2021, he passed on investing in all these companies because he saw something wrong with those companies, which ultimately he was absolutely right, because all of them collapsed. And many of his peers, by the way, invested in FTX, they invested on Celsius, they invested in BlockFi, etc. And they all, went down to zero. But he thought that what we do is regulated, is going to take time to happen, but it will happen. And it's basically about the plumbing of capital markets, which they understand is safer because it's been regulated, means that we were not doing anything illegal, etc. And now obviously they're going to do very well with our IPO, but kudos to them because of taking that decision. And that kind of like got the company going for the next few years. And then the second part was right after, when we signed up KKR, the first major asset manager that wants to tokenize something. We were super happy. I was actually in the front page of the Wall Street Journal, which we've never been even mentioned by the Wall Street Journal. Like, they care about us or what we did. So I remember a friend of mine sent me the physical paper saying, like, have you seen, like, you're in the cover of Wall Street Journal? I was like, wow, this is unbelievable.
That had to be a really good high. Like, that had to be
It was a very good high feeling. Okay, first I've managed to raise the money, so the company is safe now. And then we landed a major customer. People recognize the importance of what we did, etc. And guess what? 2 months after or 3 months after, I don't remember when, FTX collapsed, SBF is like walking out of the Bahamas home in handcuffs, and then all my customers disappear again. And it was
what
like,
a time.
oh shit, this is like, going back to, the drawing board again. So those are like the two worst moments, trying to raise the Series B, and after we raise it and land a major customer, everything collapsing in crypto. And the TradFi firms, they knew that what we do had nothing to do with what was happening there, but the brand association was there, right? Like I remember the chief strategy officer of a very major, very large bank, that we had an LOI. We were about to do a tokenization project, and he basically called me and he said, "Look, there's nothing wrong with you, but we don't want to be on, a Wall Street Journal article, a Bloomberg article saying we're tokenizing with Securitize, and SBF has been, sentenced to jail for 25 years. We just don't want to be in the same article talking about crypto." So.
Oh, man.
So that was tough. But then, 23 came, crypto kind of didn't die. People started this whole narrative about real world assets, realizing that they needed to do something real with the infrastructure that people have built over the years. And then of course, then BlackRock came. That completely changed the game of the.
Oh
of
yeah,
the
who did BlackRock come to you guys, or did you guys go to BlackRock? I don't know if you can say that or not, but
Yeah, I guess I can say it. We've met the BlackRock team in 2019, if I remember correctly. That's when Robert Mitnick joined the company, and I believe at that time he was the only employee in the digital asset team. And then we discussed with them, presented what we do. Obviously, we were a much smaller company doing less things, etc. And then in 2023, Larry Fink was on TV and CNBC, etc., talking about tokenization. And then BlackRock came to us, and I guess they went to, as far as I know, to many other people as well, to try to find a partner that they were going to, embark in this journey of tokenization. And ultimately, after a lot of work,
sure,
we ended up winning the deal, and here we are. So
that, I don't know why I'm saying like that had to feel all many times, but that also had to feel pretty badass. To have
felt badass when we signed it and we announced it.
Yeah, that just had to be. Oh man, I can't imagine how that had to be great. That had to be a really great feeling. So now, how does it work with, because BUIDL is on Uniswap X now? How does that process work with tokenization and people buying and selling things, and then on other spaces? I mean, I don't want to get too technical, but also I don't understand it.
So DeFi, broadly, DeFi has two types of applications, right? One is lending, where you take a token that represents a digital asset and you post it on a DeFi protocol, and you can borrow against it, and you can use that money to deploy the dollar somewhere else, or you can leverage the same asset, etc. So that's one part of DeFi. The other part of DeFi is trading, where you have these on-chain trading protocols, Uniswap X being an RFQ1, but there's other automated market makers, etc., that allow you to take a token that represents a digital asset and then trade it on-chain in a more efficient way, in a decentralized exchange, right? So those protocols, they've been designed for tokens that represent digital assets that are not securities. And that means that the token is permissionless, is anonymous, etc. So we've been working over the last, I would say, 2 years on working with those protocols on seeing what is that they need to change in their protocol to be able to take tokens that represent securities. BUIDL is a security. So as a security token, is a token that behaves differently. It moves only across whitelisted wallets. It's a permission token. You have to, if somebody is buying it or selling, then you have to record the transaction as a transfer of a security, and then you have to do, reporting of a transaction, etc. So we've been working both on the technical side of things as well as on the regulatory side of things, because sometimes in the case of Uniswap X, the technology lift is not very big, but the regulatory lift to make sure trades happening on Uniswap X of securities are counted as a lawful transfer of a security, providing regulatory coverage using our licenses, as the dealer using our broker-dealer license, doing the trade reporting and all that stuff that is required for securities.
Is there a threat of MEV attacks with going on chain like that?
In this case, it's not, because it's a fixed price, right? So RFQ, this is a Dutch auction RFQ. So it's not that you're saying, I want to buy this asset, and then someone can sell it to you at a different price. That you want to sell the asset, and then you have a bunch of market makers competing for who is offering you the best price, and then the protocol itself determines to where is routing the trade, and then it settles on chain.
Okay. I was just always wondering about that. It pops up in my head every once in a while. So you guys are tokenizing in your IPO. You're tokenizing your own equity.
Yes.
And nobody's done that before, right? For an IPO, to bring up there.
So recently, just to give credit to what it's deserved, Figure has done a separate share class.
Oh yeah, that's right.
Where the one share class is the TradFi one, and one is tokenized. What we are planning on doing is not to do two separate share classes, but the same share class, where you have some shares that sit on DTCC, and then some shares that sit in the books and record of a transfer agent in tokenized form. It's ultimately, for people consuming this, is very similar in the sense that you're consuming a token that represents security, but it's a native equity tokenization. And the origin of this comes from a project we did many years ago with a company called Exodus. Exodus is a wallet, a crypto wallet provider a very good one, by the way, that they did a tokenized equity offering of,
Oh, yeah,
of
they did
equity
that
on their
a
own
while ago.
company as a Reg A Plus offering, which is like this crowdfunding exemption. They raised $75 million. And then after that, we actually managed that tokenized offering for them and became their transfer agent for their tokenized equity. And then they got listed in the OTC markets and then subsequently in the New York Stock Exchange. And then we then managed as a transfer agent both the securities that are on chain versus the ones that are, let's say, off chain in the DTCC, books and records. So that's how the mechanics of it came out to be. For a company like us, newly going public, and then allowing people to buy the stock once it gets listed and the tokenized equity one simultaneously will be the first one. Yes.
That's pretty awesome. And when is that happening?
I don't know. I mean, it depends on the SEC approval. So we already filed the S4 publicly. This I can say it because it's public information. So that was the file we did after the S4 was filed confidentially, and we addressed the first set of comments from the SEC. So now we're kind of waiting for the SEC to approve the S4 to then go public. So I hope in the next few weeks, a couple of months, hopefully the whole process will finish and we'll go public. And by the way, because markets are not very choppy these days, maybe not going public right away is not necessarily a bad idea, but we obviously are very keen on going out as soon as possible. And obviously as soon as the SEC approves the S4, we'll get the process done.
How big, or I guess not how big, but how quickly is TradFi, or I guess we could just say equity markets, how long is it going to take them to like fully switch over to tokenized on a blockchain?
I think that it will not take very long for most of the publicly traded companies to have some of their shares in tokenized form, but it will take very, very, very long time for everything to move on chain and traditional markets disappear. So my personal view of things is that traditional markets have been there for many, many years. They're very robust. They're very liquid. There's a lot of infrastructure being built, etc. Displacing that is nearly impossible. Like that's not going to happen overnight.
Sure.
I think that what you will see is that every single publicly traded company starts having either some of their shares or a different share class that is tokenized to tap into the crypto ecosystem. The same way that if you remember, 5 years ago, 6 years ago, Robinhood started to offering IPOs for retail people, and that didn't exist before. IPOs were institutional only, and then people started allocating a few percentage to retail people that could participate on IPOs.
Are you guys going to do that?
Well, we're not doing an IPO because we're doing a SPAC. So
that's right, SPAC merger, yeah.
Traded, so there's no new share class. Once we do a second offering, we'll definitely make sure that retail people can buy, but the SPAC is already publicly traded. Anybody can buy. There's no investment advice, by the way, but people can buy. But my point being is that this has become a norm, right? Like every single company going public now has a retail allocation, which is kind of it's not like a tokenized because it's the same rails, but it's a different audience that they're trying to tap, right? So I think that people will start doing the same thing, that every single publicly traded company will have a percentage of their shares that are in tokenized form, so they interact with the crypto ecosystem. And that part, over the years, will grow to become maybe the dominant part. The same way that, when you had, iTunes came up, people were consuming music streaming, but for many, many years, people were still consuming compact discs and going to stores and buying. And over time, one thing migrated to other, and naturally things migrate to digital. And then the one industry disappear and the other one remain the only one that exists today, right? But it took 20 years to do it. So this being financed, being regulated, etc., will probably take longer for doing Now, you don't need to do a full migration for this to be a massive industry for crypto, right? Because if you look at how big, the trading of public equities is massive compared to crypto. So even if like 2% moves into crypto, then you're doubling the size of crypto. So I think that this become a very, very important part of the crypto ecosystem without necessarily being like a huge percentage of the TradFi that migrates there. So
is just a couple more questions. Like the networks, I always say crypto, but like what are the most built on networks that you guys use? Like there's Avalanche, XRP, Stellar. Hedera. There's a lot of chains that have some type of tokenization on it. What's the one that is there one that you guys use the most, or that you use exclusively, or?
I think we don't use anybody exclusively. We support 18 different chains. So we are blockchain agnostic and try to support as many chains, because every chain has its own ecosystem of protocols, liquidity, features in some cases, etc. So we're blockchain agnostic. I think that the AUM of our assets kind of maps the size of the chains, like Ethereum being the largest one, Solana being the second largest one, and then the rest coming after. Because it's naturally, there's a correlation between the size of activity in that chain and the size of RWAs. So,
in other words, there's one other personal question I wanted to ask, because this is one I've always want to ask people is, you went to school for PhD in computer science. How you go from that to then, like, all of a sudden I need to hire people, I have employees, benefits, how do I run this business, expand it? Like, there's no school for that. I mean, I guess there's MBAs, but like when you're developing that, I mean, it's, and the reason I'm asking is because my wife is a psychologist. We started her practice, and like this process, I don't have to personally go through. A little bit I have to go through it personally. I have to hear the bad stories, but I've just always been interested in how you dealt with that, or how that transitioned into you being the guy in charge of all this, and it's just interesting.
That's a very good question. So my career before Securitize had basically had kind of like two types of companies where I worked. I worked in multiple companies, but two types: small companies, where I was kind of like not the founder necessarily, but doing kind of like managing a startup to some extent, the small companies,
Sure.
etc. That's kind of where I started on my career. And then I work in very large corporations like, Telefonica, as we discussed, and then in Dubai, etc. And then I think that the working on a large company also teaches you how to be a manager, and how to hire people, and how to have discipline, reporting, and how to manage a lot of people. Like at Telefonica, at the peak, my team had like 1,500 people.
Oh my gosh.
Which is a lot bigger than Securitize cities now. But of course, you are inheriting the infrastructure about how to manage this many people, right?
Yes.
While on a startup, you have to create that infrastructure. You have to hire the managers that will help you do that and set up the processes and etc. I think that obviously our company has had a lot of like ups and downs and different people that came through over the years. But I think now we have a very...
Well, they've been doing something right, because you've got BlackRock.
I know. So, we've been doing something right, and we also made a lot of mistakes. Let's just, you don't get here on a straight line, right? Like you go like this. Like there's my CTO, he always tells me that we do the drunken walk, right? Like if we go from here to there, we don't go straight. We walk like we're drunk, like going like this until we get there. Because that's kind of what the startups do, right? Because you don't know exactly, you want to get there, but you don't know how to get there. So, but I think now we have a pretty robust team with, a lot of a good combination of more senior people with more, young talent that, help us manage the company, and I have a really good team that helps me manage the company. And, a lot of the things you're also learning on the go, right? So obviously you have a past experience of having worked in multiple companies. I'm not as young as most of the entrepreneurs that they start a company when they're, 20 years old and they've never worked before. I had a good career before that you tap into for learning and
Sure.
figuring out what to do. So
Awesome. What do you see end of 2026 Securitize? Where's that?
Well, so we'll be publicly traded already. So it's going to be a new life for us as a company to have to report earnings and deal with the volatility in the markets,
Oh boy.
etc. So that will be interesting. I think that I see that things like tokenized equities, which we're talking a lot now, are a reality by the end of 2026, and we have all the major exchanges. Some of them announced, some of them not yet, but launching initiatives, so how to trade tokenized equities on chain, and I see ourselves playing a big role in that space. I see, TradFi getting more and more involved with tokenized assets, not just from the supply perspective, which is where we are today. All the asset managers want to tokenize, but also from the consumption perspective. I see the DeFi integration becoming more of a reality than it is already today. And then I also see us probably once we go public doing, expanding through M&A, because I think that's one of the reasons we wanted to go public. I think this industry is ripe for consolidation, and publicly traded companies have a competitive advantage in terms of consolidate and buy other properties that complement the service offerings that we do. We're also obviously looking at internationally, what else can we do? And now that we're going to have more money, which other countries we should be paying attention to, or hiring, or getting a license, etc. It's going to be a very exciting year. We're hiring a lot of people now, and the industry is exploded, right? Like tokenization after stablecoins is the second biggest narrative by a mile in crypto. So
it's I don't know, this downturn in cryptos, and people are asking, it's like, oh, you think it's as bad? It's like, I don't know. I've been in the space since 2016. It's your first bear market, you're like, oh my God, this is horrible. The second bear market, it is, oh, not again. The third one, you're like, oh, it's just doing that thing. You just kind of, the only thing,
the third for me.
The only thing bearish about the entire space is the price action. That's about it. Because the amount of money and people and interest just, it only goes up. It doesn't go down. It's just the price action does its.
Correct. Look, this is a company that's like this, right? So it goes up, it crashes a little bit, then it goes up higher, it crashes, and it goes up higher and crashes. So
yeah.
And the second half
drunken
of the year
walk.
should be good, right? Like it's the drunken walk, but towards. So I think the second half of the year is going to be much better than the first half.
Oh yeah.
I think that also from a macro perspective, you're looking at, probably lower interest rates with the change of the Fed chair, and a lot of the volatility that we see in the markets now is probably going to disappear, etc. So yeah, I'm pretty bullish overall in the space. I think this is one of the things I'm convinced this is real, right? Like this has tangible benefits for anybody using the technology, and of course there's a lot of other barriers of adoption, usability, regulation, etc. But those things go away over time. So I'm not concerned. Look, things might happen faster or slower than what we think, but they're happening. So
I know on our platform, like I'm the only with the exception of Barkley, who does our social media, we're the only two crypto people at StockTwits, or I call it StonkTwits. But all of our users, like tens of millions of monthly users, most everybody is just on the traditional finance side, and it's not so much now, but Securitize is like one of the words and names that has gotten a lot more attention on our platform. And this isn't like really a question. I think I'm just like saying that, like it's at least like on our platform, Securitize is one of those names, tickers that bridges everything together very well.
Good, correct, because we sit in between, right? So we're going to do things that modernize traditional finance, but we're going to also do things that improve how crypto technology is being used. And also, us being a publicly traded company, we're going to, the people that follow stocks will be able to, look at what we do and invest in us if they like it, and the crypto people as well, right? So it's a very exciting time for sure.
Yeah. Well, this was so much fun. I told Keith before you even came on, like when they start like writing history books in about like how businesses changed to go on chain and stuff, that like your name and Securitize are going to be like in those history books, because you guys are like, let's be serious, you guys kind of like made it happen. I mean, there was like other people, but you were the ones who survived the Slaughterfest and stuck around.
True.
So it's pretty.
Because we were since the beginning. Now we have different people in the space, but hopefully in the history books at least we'll have a little corner about having done the first of many of the things in the industry and help create an industry that I hope is going to be trillions of dollars in size.
But I think it's going to be like a good playbook for like other things and that develop that are new, where going the route you went was the right way. Like be disruptive in a space, but also play by the rules so governments don't go after you, or don't go after you. Like
it's very easy to say it now, but as I
very easy to say now.
It was tough to stick to your beliefs over the years when everybody else around you was not doing the same thing.
No, that's
here we are. So I think ultimately, and people now ask me, oh, what do you think of these projects that they're doing this tokenization in these ways and other, which in some cases, I have my own concerns about the legality of some of the projects in the space. And what I tell people is, look, ultimately, the right way of doing things prevail, right?
Yeah.
Because naturally, that's where things. If you do things in the wrong way, ultimately you run into problems, because those things are wrong for a reason, right? So ultimately, the right thing prevails, and of course, the only issue is what you do in between when you're competing with people playing regulatory arbitrage or simply breaking rules, etc. Stuff. But if you believe what you're doing is the right thing to do, ultimately prevails, and you just need to wait for it to happen. So.
Awesome. I mean, that's all I have. I mean, I bet there's going to be something that pops in my brain later. I'm going to go, why didn't I ask about this? But I can't think of it right now. But I'm very honored that you came.
This was very exciting. We should do one once we go public and.
Oh yes, definitely. That would be awesome. That would be great. Yeah.